I do this daily, by the way, so I would really appreciate if you hit the subscribe button and you came back tomorrow and you watched along as well. You know, if you saw this, then why not? I'd really appreciate it. I genuinely mean that. Thanks very much for tuning in. Catch you next time. Hello friends, let's take a look at Tezos, starting off here on the weekly chart as I have been across the coins today. And what have we got on the go really well? You know, looking at this weekly time frame, you can kind of line this up quite easily with our this is of course versus Bitcoin, with our Fibonacci retracement here that we've got drawn in. Now this is drawn in on a different time frame from where we what we're looking at just now, using, you know, other things, which is why it doesn't quite line up. It's a bit in no man's land there between the wick here of up at 3,140 and of course up here where we saw the price action go up as high as. So this isn't necessarily one for the weekly time frame, but it's what we've been using recently, and you can see that the prices came all the way down as far as during this week the 21 EMA on the weekly and touched that. So that's the first area to be looking at as we put in a higher low. Now we could still see the prices go on down here. Anything on the weekly time frame as far as 2,700 is a higher low. We would obviously prefer that not to happen. We've already come down here and sort of had this turnaround at the 786, so that would be ideal if that actually played out for us. Let's go down. In fact, let's just sort of stair step down, go to the 2-day time frame. In terms of the 2-day time frame, the Fibonacci still doesn't quite line up with anything. I'll have to check that actually does, and I've not moved it or whatever. But yeah, anyway, that we're coming in here, we've come down as far as the 618 in terms of the bodies closing. As you can see, the 786 in terms of potential turnaround area still also got a higher low in terms of just this little kind of section here in terms of the price action, and managed to maintain itself above that green line there, which is fairly crucial. Coming in at the 24-hour time frame though, where we can start to look at things in the way that we have before. Yes, indeed, drawn in body to body here, as you can see with this Fibonacci retracement, come all the way down to the 618. We've got a few candle bodies in around this area. That's good to see having happened, with a golden pocket retrace down there towards that 2,800 area, as we knew could happen. Indeed, actually extending as far down as 2,700 for the sort of the people who were really kind of, you know, betting on a 144 turnaround. Indeed, actually probably more likely a weekly 21 turnaround price action there on this one, and we've come up again since. Overall, is this what we need to have seen happen in order to turn up and go for the upside? Generally speaking, I'm disappointed to have put in a lower low than this area here, in which case, you know, you're kind of looking at it and saying, is this all just part of the upward price movement here? So this would be a low, our next low, and then, you know, our low, high, lower low, and then, you know, is this just the high here and everything else in between just being sort of like part of the build up towards this current price action? Well, if that's the case, then you could be looking down even lower than 2,700 towards this crucial serrated blue line here at 2,618. I don't want to see that happening, and instead prefer to see this actually be the higher low in here at these crucial areas of support, and for it to turn around now. As you can see here on the oscillators below, if this did turn around now and this was the low previously and this is the low now, that's not hidden bullish divergence or anything like that. In terms of the highs, looking here, well, if that was the case, there'd only be one high, and you wouldn't be able to make a case for divergence on things. Although, yeah, you know, there was a bit of this bearish divergence on the stochastics and the DMI to be being aware of. So that 2 out of 3 ain't bad thing again here on this one. But the RSI, it wasn't. Okay, yeah, just generally speaking, you know, things have been going along overall okay, although we've had a lot of the bearish price action coming in, which we could see quite clearly really actually on the lower time frames in terms of this downward price action really from these, you know, we had a high in here which came in at the 3,171 area. In a sense, that was the sort of the exception to the rule, since this downward price movements overall here, which were not actually bullishly divergent throughout this little period here in terms of downward price action. So, you know, there's that. But right here towards the end, have we got the first signs of it coming in now? And could we be looking at this with a touch of positivity? Well, I think so. There could potentially be, in a sense, in terms of the low time frames, the chances, if this goes up above, of course, caveat here, 2,900 area again. But if we do that over the next day or so, go up to that 2,900 area, maybe try and prevent a death cross on the 4-hour time frame with the 200 and the 50 simple moving averages and come up and test that 2950. Maybe we'd see some bullish divergence here operating up above our heads. We've got the 21 EMA. I'm going to be looking at the 4-hour time frames in terms of figuring out how things are panning out over the next wee while. And by looking at this, I'm looking towards the 2,883 area where the 21 EMA is, the 2,950 area where the 200 simple is, of course, and the 50 simple and the 55, and a confluence of moving averages in at that area. This sort of little kind of previous perhaps potential inflection point before the volatility kicked in, and moving up towards the 3,000 area. You know, breaking up above that there will be very positive. Again, indeed, going up above the 236 and making things go back towards like kind of the beat going on with the overall perhaps overall upward trend that you could have been looking at beforehand, you know, in terms of you know these higher lows and these higher highs, which, you know, ultimately did come in as being slightly bearishly divergent and led to this movement here. So, you know, still the potential for turnarounds. As we can see, we've had our third profit-taking target completely hit here. So, you know, there's no need for it to continue down the way, and a 786 reversal point is actually fairly common. So in terms of the bearish case scenario, which I actually was more personally interested in since we hit the $3 and the 3,200 Satoshi level, we've had that play out fair enough and fully done for us. Let's go back over to the dollar prices now. Everything's the same here. This is not... it's way too premature to say that this would be any sort of actually no, this isn't as low or anything. So there's no divergence here to be looking at. This is just convergent bearishly on the way down the way from a very brief look at things. Of course, the strength of trend indicator in the 4-hour time frame is very much in the bearish case scenario. Looking at it on the 24-hour time frame instead, though, what have we got? Well, high, higher low, higher high, higher low, potentially. Is that what we're going to call it? In which case, bearish divergence, potential for hidden bullish divergence here at the end if this becomes a local low. So if we see the prices go up above $3.05 again, we might be able to look towards this and say we had hidden bullish divergence here. Should probably, actually, there's a touch of hidden bearish divergence. This was from ages ago. I should have deleted this ages ago. But actually, you know, those things are kind of the reverse scenario now that we're looking at in terms of this one. There's perhaps you know, whilst we have bearish divergence on here in these time frames, there's perhaps a touch of the hidden bullish divergence overall here. Let's just check in with the 12-hour time frame actually and see how that's going. So yeah, again, hidden bullish divergence perhaps on the 12-hour time frame, and it actually, you know, there was bearish divergence there. That was a wee while ago, since the lows down in the 11th of May, where we've really had our upward trend going since. We're not divergent there. So the 12-hour time frame is actually not looking too bad, although we do have this this catapulting up the way of the DM negative, but that's what you'd expect following on from this volatility here. So we're going to have to see how it pans out. Of course, the ADX is still below 20. You know, I wouldn't mind seeing this go up above 20 as with these actually crossing over during this period here. But of course, the ADX is calculated by looking at the divergence between these two lines anyway. So that isn't, you know, anyway, we can see how that pans out over the next wee while. Looking at our horizontal price targets, 280, you know, like the 280 area really up there, and then $3 being the crucial ones before we even actually ask the question of $3.10 for a higher high, if that were to be possible. So that's what I'm looking out for in terms of, you know, where I would crack it towards the downside. Well, first off, you've got the 144 there at 160. If you go up to the 24-hour time frame, that moves down the way. You can see it's not there at 160 anymore, but you can actually see that the sort of our low at 160 that we've just set in would obviously kind of be the area to look out for, and looking down towards 240 really is sort of the next one. If we break down below 240, then 230 of course is definitely on the cards. You know, we actually are on the cards for a movement down towards 230. That is possible. We could have that where the 144 is coming in at, and finishing off here by going to the weekly time frame on this chart. Where can we see? Okay, so actually this is looking better for the trend here. We have this moving up the way with higher highs that are not bearishly divergent, although it's very shallow on the way up there, just purely versus this movement since, of course, the drop down in March. DMI is slightly divergent. Sure, the stochastics and RSI don't look to be. You could have potentially a touch of hidden bullish divergence if that's going to be the case just there, potentially on the RSI, potentially. maybe, you know, so maybe we've done what we need to do here. We are on for a move down here to the 230 area. That is possible, having broken down below this. I mean, just take this as a sort of measuring stick here and stick it in here. Of course, you know, like make it the full length, stick it in, then do the 75% thing that you're really kind of supposed to do, and then say, yeah, you could easily get to 230, and that's where the weekly 21 EMA is coming in at. So that's, you know, that is definitely still a possibility. That might be, you know, this is definitely an inflection point for us. Breaking down below this kind of undoes all of this, and we could be, you know, looking at a downward trend instead. But, you know, currently things are all right. Things are still looking pretty good overall, and yeah, we'll just have to bear in mind all those sort of in between targets that we're looking at. Thanks very much for tuning in. Really do appreciate it. I hope you've had a good episode today and enjoyed it. I hope you're having a good day out there anywhere that you are in the world. I'm going to go off and enjoy my cup of tea now, and thanks very much for joining me. Catch you next time. Please do hit the button. As always, I do this every day, so I really appreciate anybody who thinks that it's worth subscribing to the channel, and I would really encourage you to do that because it gives me a lot of positive feedback, and it really is a really, really valuable thing for the growth of the channel, so I really appreciate it. Thanks very much. I'll catch you next time.